Hi everyone. Today we are going to learn a new topic, that is reverse charge mechanism. Before learning what is reverse charge mechanism, we have to understand what is the clause related to place of supply. Under the VAT law, the articles 27 to 33 explains what is the clauses related to place of supply. And the reverse charge mechanism, the clauses applicable, and the decree law as the clause number 48. As per the place of supply law, if the supply is treated as within UAE, UAE tax will be applicable. By the provisions, if the place of supply is treated as outside UAE, tax will not be applicable in the UAE. That means wherever the place of supply is in the UAE, UAE tax will be applicable. If the place of supply as per the laws outside UAE, UAE tax will not be applicable. This is the basic concept of place of supply. In the case of goods, the place of supply is the location of the goods when the supply happens. The basic rule of place of supply is the location of the goods where the supply happens. But there are special provisions in the law. That is, in the case of cross-border transactions, there are special rules. In the case of water and energy, there is special rule. The same way, in the case of real estate transactions, there is a special rule. So now let us understand the transactions, especially the cross-border transactions, what will be the place of supply. Just before going for the cross-border transactions, let us understand how the transaction, what will be the place of supply if any sale is happening between two Emirates. For example, a supply is happening from Abu Dhabi company to Dubai company. Of course, the place of supply is UAE because goods are within the UAE. So the place of supply is from Abu Dhabi to UAE. So within the UAE is the place of supply. Then we can connect another clause here, that is clause number 72 in the executive regulation. That is the Emirates wise reporting. There in that law, it is mentioned for report purpose, Emirates wise reporting has to be done where the fixed establishment of the company is located. That means if a company is having two branches and one head office in Dubai, one branch in Abu Dhabi, another branch in Sharjah, whatever sales happening from the head office will be Dubai sales. Whatever sales happening from Abu Dhabi branch will be Abu Dhabi sales. Whatever sales happening from Sharjah will be Sharjah sales. It is not the location of the customer. It is where the fixed establishment of the company is located. That is for the Emirates wise reporting. It has to be reported in the VAT return form. The Emirates wise reporting has to be done in the VAT return form. But now we are discussing about the place of supply. Let us go the next transaction. This is for the Emirates wise reporting in the UAE VAT return. In the VAT return form, Emirates wise reporting is required. So this clause will be applicable for the return purpose. But place of supply is applicable to understand, to identify whether the tax will be applicable within the UAE or not. So in this slide, the UAE transactions are happening within UAE. So from Abu Dhabi to Dubai, so tax will be applicable in the UAE. Now let us understand what happens in the case of export. That means from the UAE, goods are going outside the UAE other than the implementing state. That is, implementing state is KSA only now, as of now. So other than KSA to any other country, if we are supplying, how the tax will be applicable? It will be export and zero rated. Any country outside KSA will be zero rated and it will be export will be considered as zero rated. There are some transactions which are happening outside the UAE, like some sales are happening from China to another country like USA. That means both countries will be outside UAE. Materials will not be touching UAE. So in such cases, these are called out of scope sale. out of scope sales. So these sales are not within the purview of UAE VAT law. So it is not taxable at all in the UAE. This is very important transaction, that is import of materials from outside UAE. When import is happening, as of now, there is 5% customs. When VAT is there, now VAT is already implemented, so 5% VAT also will be applicable over and above the customs duty. That means when we are importing, if the 100,000 is the value of import, 5% will be the customs duty. Over and above, 5% VAT also will be applicable. Since the supplier is outside UAE, he is not the person who is responsible to pay the VAT. It will be payable by the importer himself. It will be treated as the customer is responsible to pay the import VAT. This is called reverse charge mechanism. The customer has to pay himself. Here let us learn the reverse charge mechanism with an example. Suppose the importer is importing the value of material is 100,000, CIF value is 100,000. 5% customs duty will be there, so 5,000 tax. So 105 is the total value of CIF plus customs. Over and above 5% VAT will be applicable. That is 5% on 105,000 equal to 5,250. If the importer is not a registered person, or if he is an individual, at that time when import is happening, that individual or the unregistered person has to pay VAT while importing. That is 5,250 also has to be paid to the authority along with the customs duty. When the person is unregistered person, when importing, he is paying tax while importing. So the entry has to be on purchase 100,000 and the customs duty 5,000, and the VAT will be an expense for him, that is 5,250, and the credit has to be given to suppliers as well as suppliers 100,000, as well as the cash which he has to pay has to be 10,250. Now let us consider in the case of registered person. Registered for VAT, the person is registered for VAT, so he is importing in his own customs code. In such case, the applicability of reverse charge mechanism is only a journal entry. That means, as per the law, it is said, the importer has to pay the tax on import along with the VAT return. Suppose he is importing in the month of January, and the VAT return period is quarterly, January, February and March quarter, ending with 31st March will be due on or before 28th April 2018. In such cases, he has to pay the tax on import only along with the VAT return. When he is filing the VAT return, he will show as payable. At the same time, he can take the input credit as well. That means it will be a journal entry. The entry will be like this. The total purchase value will be 100,000, purchase debit 100,000. Then the customs duty will be 5,000 and the input tax on import will be 5,250. Then in the credit side, suppliers will be 100,000, cash will be 5,000 which we are paying to customs, and the output tax on import will be 5,250. That means input on import 5,250 and output on import is 5,250. It's only a journal entry because we are taking the input credit as well in the same VAT return period. So in short, when a registered customer is importing materials in his customs code, he need not pay tax while importing. He has to pay tax along with the returns, means he has to just pass a journal entry because he can take input credit. Now let us understand how the place of supply will be applicable in the case of transaction with an implementing state. As of now, implementing state is only KSA, only two countries, that UAE and KSA, are implementing VAT at a time. So for UAE, as far as UAE is concerned, KSA is only the implementing state. So when sale is happening from from UAE to KSA to a registered person, the place of supply will be KSA. So UAE tax will not be applicable. Only KSA tax will be applicable. In the case of goods, there is another point which we have to look into, whether the person in the KSA is registered or unregistered. If the person in the KSA is unregistered person, the UAE tax will be applicable. We have to supply with UAE tax only. We have to collect and pay UAE VAT in the UAE along with the VAT return. At the same time, if the supply by the supplier in the UAE to unregistered person in KSA is exceeding more than 375,000, that is the threshold limit, in such case, the place of supply will automatically become KSA and KSA tax will be applicable. However, keep in mind, this limitation of 375,000 is not applicable in the case of services. This is applicable only in the case of goods. If the person is doing a service to a customer in KSA, if they are registered, KSA will be place of supply. If the customers are not registered, always the place of supply will be UAE and UAE tax will be applicable. No KSA tax will be applicable even though the supplier of the services is doing a service for a period of 12 months even more than 375,000. In short, the threshold limit of 375,000 will be applicable only in the case of goods. In the case of services, the threshold limit of 375,000 is not applicable. Sometimes there will be some transactions which materials are coming from outside the world to KSA through UAE port. So in such cases, if the final destination of the products or the materials are KSA, in such case the reverse charge mechanism will not be applicable only by passing an entry. We have to pay physically the input tax, the output tax payable on import. Physically we have to make the payment, then transfer the materials to KSA. So this is a special provision which everybody has to look into in the case of transfer of goods through UAE to KSA. In the case of reverse charge, we have to make physically the payment has to be done. Let us see how the journal entry will be for this kind of transaction. See, when we are importing the materials, importing through UAE and end customer is KSA, at that time the total amount which is the output tax on import has to be paid, 5,250 has to be paid physically at the time of import. So it's not a journal entry, physical payment has to be done. This amount cannot be recovered from the UAE, this can be recovered only from KSA. Now we are going to understand how a UAE VAT return form looks like. To understand that one, we have to know, let us take an example. For in a particular month, for example, in the month of January, there are some certain transactions happening. See, the total sales for 1 month is 10 million. Local purchase 6 million. The company has taken some service from overseas. Example, some software services or anything. Assume that it is 1 million. They physically imported goods through UAE customs to the extent of 2 million, and they have some expenses 2 million. By considering all these transactions, how the VAT return form looks like. The upper category is output tax, the lower category is input tax. The difference between output and input is the net amount what is to be paid to the authority. In the output category, the first one, the point number 1 are related to the standard rated supply. In the case of standard rated supply, see, it has to be given Emirates wise. In my example, 10 million is the total supply happened, or that it is assumed that everything is in my example, everything is from Dubai. So I have given the point number 1B, that is Dubai sales, that is 10 million sold and 500,000 is the tax value. Now see the second point, that is the reverse charge, supply subject to reverse charge. So here the point number 2 has to be the output tax on import of services. 1 million services imported. For that, we have to pass an entry of 50,000 is the tax liability. Point number 3, zero rated supply. No zero rated supply for this company. Number 4, supply to registered customers in implementing state. In my example, I haven't considered any sales to implementing state. Point number 5, exempted supply. Here also, there is no exempted supply for this company. Now the important point comes, point number 6, import VAT through customs. That means whatever the import done through customs department, that is 2 million. For that, we have to pass an entry of 100,000 is the tax liability for 2 million. Then if any adjustments or corrections are there, that has to be recorded and the total amount has to be recorded. So in my example, the total amount output tax is 650, including the import of services and import of materials. Now we will consider the input tax. The point number 9 is the standard rate of expenses. This expense includes the actual expenses, taxable expenses, as well as the purchases done, local purchases done. So total amount of local purchase as well as the expense incurred is 8 million. Then the 400,000 is the total input tax. Then the important point is 10, supplies subject to reverse charge mechanism. That is input credit on import of services as well as goods. That is total 3 million and 150,000 is the input credit we can take. So the total value of input credit is 400 plus 150 is equal to 550. The excess amount what the output is 650 minus 550, 100,000 is the net tax payable to the authority for this VAT return period. Now let us understand the provisions related to supply of services as well, the place of supply of services. The basic rule is that the place of supply is where the place of supply of services is the where the suppliers has the place of residence. Where the supplier has the place of residence is the place of supply. That is a basic rule of the place of supply for services. But there are some special rules. Of course, the cross-border transactions or electronically supply services. So there are special rules related to that. Let us check one by one. Point number 1. If the recipient of services registered in another implementing state, that means now the implementing state is another implementing state is only KSA. If the recipient of service, that is customer, is registered in implementing state, then the place of supply will be implementing state, that is the place of supply will be KSA. Point number 2, if the supplier is not a resident in the UAE but the recipient of services VAT registered in the UAE, in that case the place of supply will be UAE. That means UAE tax will be applicable. Point number 3, place of supply in the case of installation of services is the place where actual service is performed. For example, if the installation of service is done in the UAE, place of supply will be UAE. If the installation work is done in KSA, KSA will be the place of supply. If installation is done outside UAE, then that will be the place of supply. Point number 4. In the case of restaurants, hotels, catering services, etc., place of supply will be the place where actually the service is performed. Point number 5. In the case of real estate services, the location of the real estate will be the place of supply. For example, if the real estate is located in UAE, UAE will be the location of this the place of supply. If the real estate is located in KSA, the place of supply will be KSA. Point number 6. In the case of transport or services, the place of supply will be the place where the transport begins. For example, if the transportation between Dubai to Muscat, when the transport is starting from Dubai, then place of supply will be UAE. When the transport is starting from Muscat, then the place of supply will be Oman. Point number 7, the place of supply of means of transport. For example, if the rent-a-car has delivered, if the UAE not unregistered person from the KSA is coming and taking a rent-a-car from UAE, the place of supply will be UAE. But at the same time, if the goods, the rent-a-car is delivered in KSA to the unregistered person, at that time the place of supply will shift to KSA. Point number 8. In the case of telecommunications and electronic services, the place of supply will be where the service is actually used and enjoyed by the recipient. Point number 9. In the case of cultural, artistic, sporting, educational or similar services, the place of supply will be where actually they are performed. If they are performed in the UAE, the place of supply will be UAE. If they are actually performed outside the UAE, then the actual place of supply will be outside the UAE. Now we have learned the place of supply in detail for the services with the different examples. The place of supply for goods with the different examples, especially while crossing the border, while import, export to other countries, transactions between the implementing states. Here we have learned in detail how the reverse charge mechanisms entry has to be passed and how it will be treated in the UAE return form, the VAT return form. So that was discussed in detail and hope it is clear for everyone.